Welcome everyone. This is Seewing Yee, and my co-host is Mr. Richard Advani, a nation's leading investment loan agent. Welcome, Richard. We all been hearing for a long time. People have a job and they work 40-hour work week. Some people work way more than 40-hour work week. They work 50-hour, 60-hour work week, and they grind and they go through the rat race, and yet they have a paycheck to paycheck mentality, never grow much financially over time. And when it's time to retire, they retire at a very less than desired retirement. In the past recent years, you have some realistic authors, whatever, they could say, oh, let's transition to a 4-hour work week. How we can do that? Yeah, you work smart. 4-hour work week, you don't need to work 40 hours. You work smart, not hard, and you save your money, put your money in the 401k, invest wisely, get out of debt, whatever. And then maybe when you retire age 65, you have some kind of nest egg. So then another so-called real estate guru that I recently heard, he's saying he developed this program where you buy multiple rental properties, 5 to 10 rental properties, or could be more, and all you need is 1 hour work week and still achieve massive retirement down the road, not 10 years down the road, not that long. And now, Richard and I, we're breathing a new concept, okay? In fact, we should co-author a book, or you can author your own book. We have a new terminology. The new terminology is 1 hour work month. I'll repeat that, 1 hour work month. This means you, as a real estate investor, over time, systematically buy turnkey cash flow rental markets properties in affordable areas. You buy one rental property at a time by consistently scale your portfolio by multiple properties over time. How many? 5, 10 or more over the next few years, and have professional property management do it for you. So at the end of the day, whether you own 5 property, 10 property, 20 properties, or 100 rental properties, all you need is 1 hour of your time each month to manage your so-called risk portfolio. And then you can devote your important time. You can trade time for money. So you can enjoy, prioritize your time and do the things that are important to your life, whether traveling over the world, like I have done over many years and continue to do. And in case of Richard Advani scenario, Richard Advani has 20 rental properties. And if you want to retire right now, quote unquote retire, even though you're way too young to retire, you can use the passive income from your 20 rental property and still live a good life, even if you quit your full-time job or your part-time gig or the multiple gigs, side hustles that you will have. So I'm using Richard Advani as an example, even though a number of our investors that we work with over the past 20 years, Richard, you have seen it, I have seen it, who have done this kind of things, who have bought 5, 10, 20 properties or more. And right now they're sitting pretty and they 1 hour work month. This is the new iconic concept that we're creating for ourselves. And Richard is a prime example. You can go over I know we've done it before. We talked about your portfolio before. And remember a few months ago, we discussed your portfolio and I asked you, Richard, you have a full-time job. You are a great real estate investment loan agent. You have done so many transactions. You run a very thriving investment loan business. Furthermore, you have several side hustles. I'm not going to go into that. You hardly ever sleep. I don't know how, why. And also you have another great side gig. You are a professional race car driver on top of that. So you are living the life of a 1 hour work month person. So go ahead and share your thoughts. When you share your thoughts, you are sharing the philosophy and the concept which I just described to many of our turnkey investors that you and I help over the years. So go over your personal experience as well, how you are really living that life of 1 hour per month. Imagine your portfolio so you can free up all your time to do the things that are important in your life. Go ahead, Richard, share your thoughts.
Yeah, absolutely. So I don't know if I'm living the 1 hour work month yet, but I have as you mentioned, I have all of the infrastructure set up to take advantage of it if I want to. With all of my side businesses and different things going on, as you mentioned, there isn't tons of time to employ it. But as we did discuss before, you have a large portfolio of newer single family or multi-unit rental homes. It creates this passive income. And, that passive income, you mentioned the 10-year mark. That is a really good mark because, once you're 10 years into a loan, you've taken advantage of rent increases due to inflation. You've taken advantage of, the fact that now you're paying down a lot of your principal balance with each mortgage payment. And we haven't even talked about appreciation yet, right? And it's very possible to add a portfolio of 15 to 20 properties and work an hour or put an hour a month into managing it. I would say I'm there right now, right? I do have some short-term rentals that I self-manage that do take some time, right? So I'm probably closer to the hour a week mark. But setting aside those two short-term rentals of my portfolio, out of 18 properties, it really is an hour a month, right? You're checking over your management statements. Essentially, the main thing you're doing is logging into your bank account to make sure you got paid, right? And if you haven't, or there is a delay, then guess what? The management companies are taking care of that for you, right? That doesn't take your time and your resources. The only thing it takes is getting an update from the property manager of, hey, the tenant did pay 6 days late. Great news. They paid that late fee, which is an increase, obviously, to your capital and your ROI. But as you mentioned too, you've got to establish that base of properties, right? And everyone's means to do that, it's going to be different. Some people are going to be able to scale and purchase 6, 8, 10 properties in a couple of years. Other people are going to be able to only buy a property every year or two. But either way, it's important to take action because everyone's ideal financial stability is going to be different, right? Odds are someone who's has the means to buy one rental maybe every 4 or 5 years is probably most situations going to have relatively lower overhead than say the person who has the ability to buy 6 or 8 properties in a year, right? Those people probably live in a little nicer house and a little nicer quality of life. So everyone's gauge is really going to be different, right? On how many and what it takes to achieve that quality of life and that 1 hour work month. But the most important thing is to get off the sideline now. Also understand that you need to buy the right type of real estate asset to be able to be that passive in it. If you're buying a home for $60,000 in rural Wisconsin that was built in 1920, it may be difficult to establish a portfolio of properties like that and have that 1 hour work month. There's a lot of our investors out there that don't necessarily want complete retirement, right? They're like, yeah, 1 hour a month sounds great, but I'm gonna get bored. So I want a mix of properties. I don't mind putting 5 hours a week or 8 hours a week and getting a little more aggressive with my portfolio. And that's the beauty of having organizations like Seewings. Not everyone gets the same serving of food, right? Some people are going to have an allergy to nuts and want a different type of asset that's going to be a little more aggressive. Some people are going to have a little more passive strategy and want to employ, hey, I want to have minimal hands on it as possible. I want it to be more like that 1 hour work month. And you're going to pick properties and a strategy accordingly for those people versus people that don't mind putting in some time and do want to get a little more aggressive with their portfolio. I think people look at real estate very singularly, right? When you talk stocks to people, they automatically right away, they're like, okay, stocks is such a broad thing, right? You have penny stocks, you have blue chip stocks, you have financial stocks, you have this, you have that. And I think people tend, especially new investors, to look at real estate just as this big thing. And it's not, right? There's 50 plus different investments within real estate that you really need to cater to what you're looking for. There's going to be a different product for everyone out there. And I think once you realize that, it's not just about buying real estate, it's buying the right real estate that's conducive to helping you accomplish your goals.
Yep, Richard. Not only that, at the final module, we for the remaining 5 or 7 minutes we have, maybe slightly longer. Here's what I want to share with you. You and I, we for the most part, we like this long-term buying approach. We delegate everything to a property manager. We buy remotely. We buy out of state and let the local team to help us manage the properties over time. And we scale accordingly based on what we just said. We work smart, not hard. But lately, the last few years, meaning you always have some new real estate gurus out there and they're promoting other type of investment properties. Try and true for the past 20 years or so, you and I, we take this long-term methodology, investing, buying turnkey properties in good markets, where whatever, but all the is not exciting. What we're doing, boring buying the whole properties, boring properties, we buying in a boring market and invest over time. You have this business gurus that pop out of nowhere from time to time over years, especially during the last few years. They're promoting like short-term rental. They're promoting flips. They're promoting syndication. They're promoting self-managed or rental properties. They are promoting all the real estate gurus out there, including, I'm not here to pick Bigger Pockets. It's one of the largest real estate member organizations in the country. And they push, every time they have a speaker come on a daily basis, the instructors they have, I don't know, I'm sure you saw some of their videos, Bigger Pockets, and not just Bigger, I'm not picking on Bigger Pockets. There are many organizations, real estate gurus, they preach, I specialize in flipping big luxury homes in Seattle, Washington. Or another person saying, another guru instructor promoting BRRR. You buy, repeat, refinance, whatever, BRR approach, which is fairly difficult. And some gurus from Bigger Pockets, they're promoting short-term rentals. Are we doing well short-term rentals in my market, in my work in Los Angeles or whatever? So I know, and everybody have a niche, but the way this real estate gurus and YouTube channels, they talk a big game, they overpromise, underdeliver, and oftentimes, in my mind, there's a lot of challenges occurred lately, especially with the short-term rentals, right? With the Airbnb kind of deals, and there's so much restrictions in certain areas that a lot of newbies that enter the Airbnb short-term market space, and they're getting burnt because they don't know what they're doing. They buy at the wrong time with the COVID situation changing, with the short-term restrictions. So there's a little bit of Airbnb short-term rental corruption, if you will. Although, just like anything else, real estate is not national. It's a very local, and Airbnb are no different. Similar with BR. In this volatile interest rate market, the BR investment methodology has also have taken a hit as well. And flipping is, for all intents and purposes, are speculative. Anything that I call it, you're going to do a buy in the hole and get the yield on a long-term investment methodology that we're doing. All these years, we see this kind of other niche real estate market, they come and go. There's a lot of risk involved. A lot of newbies are entering this type of niche, and they get burnt. And the try and true method that you and I have been preaching is buying the holes long term and let the property management do your deals. So our system has survived and thrived over time. And while other investment methodologies have gone through some issues, I'm not saying we have the best system, but people have to be careful out there. Don't fall for the hype. Don't fall for this misleading gurus out there that try to sell you things that they cannot deliver. So just give your take for a few minutes, then we're done with this video.
Like you said, there's, at the end of the day, there are going to be different types of investments for different people out there, and everyone's going to peddle what they had experience with, and whether it's frankly the right product or the wrong product for the market, right? Short-term rentals are a great tool. However, typically you're paying 30% in management fees in a lot of those. So yeah, it's a great investment, but the only person who the property manager ends up making more money than you is the real estate investor. And oftentimes you're not making a much better return than, say, doing a long-term rental in that case. And what's interesting is, not to talk down Bigger Pockets either, but really that's the entry point into real estate investing, right? most of the people take the things they learn from bigger pockets, they execute on it, and then realize that's probably not the best, right? And that's typically where most customers come in that are trying to buy sub $75,000 properties, which, look, you can buy a good property out there sub 75. I'm not saying no, but it's very difficult and very hard, right? 9 out of 10 are not going to be the right property, but they hear these pundits and gurus and yeah, I have 30 properties. Yeah, all 30 of your properties add up to maybe $2 million because they're all $80,000 properties. And once you actually go down that path, you realize that, hey, it may not be for you, or there's things you overlook. But more importantly, a lot of these people touting products and investments on there barely have any rental investments in themselves. And that's the thing that I find interesting is, you'll get a lot of these guys on the phone and you say, how many do you have? One is either they're going to lie to you, or two, they're going to tell you the truth, and they don't have tons of them themselves, right? They're also just starting out. When I hear some of these guys on bigger buckets as aggressively and as confidently touting that, oh yeah, you can buy these and make you wealth and make you all these numbers and look at this return. I know enough to where I've been doing it a long time that I'll go through and look through and I'm like, this is BS, right? I've owned properties like this. What about your turnover? What about your maintenance? This property's built 50 years ago. You got none of that factored in. And you're telling someone to go buy 20 of these because it's going to create passive income.
Richard, let me give you one example of some of these people. They can say, oh, I own 100 doors. 100 doors. What the listener failed to realize, they don't own it themselves. They are part of a syndication. Let's say, oh, I own a 20-unit apartment building worth $3 million. But guess what? They are owning, along with 40 other partners on this building, they are owning a 5% ownership stake of this 20-unit building. So they don't own that 20-unit building. They don't own 20 doors. They only own 5% shares, 5% ownership spread out among 30 other partners. But they lie, they mislead the people. Why? I own 1,000 doors. Yeah, but you only own 1% shares of those 1,000 doors. Are you tell everybody you own 1,000 doors all by yourself? No, that's one of the ways they mislead the public, by owning a whole bunch of doors. Yeah, what does that mean? Or you try to impress people? You own 1 million doors, 1,000 doors. At the end of the day, you own 1% of the ownership of the 1,000 doors. At the end of the day, they are no better than any other investor who own 2 or 3 high quality properties, fast growing market, whatever. Just one quick example, right?
Yep, exactly. Well, as we always say, get up the fence. Real estate's only going one place in the long term.
All right, I think that's done. Richard. We have some great discussions as always. Thank you for your time, and we're here to provide motivation and inspiration to all those people who are still in the sidelines, and which is very sad. And 5 years after this video is being recorded, you're gonna come back. We're gonna play this video, and we're gonna say, for those of us that are taking action right now, you're gonna be rewarded quite nicely. For those people continue to sit on the sideline, your financial situation is not going to change. You're going to continue to live in your comfort zone. You're going to have a regret. That's the bottom line. Any final words from you, Richard, before you go?
Don't wait to buy real estate. Buy real estate and wait.
Exactly. Thank you. Thank you, Richard Advani, so much for your time. This is Seewing Yee. Have a nice day, everyone. I'll see you next time on the other side. Bye-bye.